Alright guys, let's expose the SEC and Citadel. How we all do know the SEC is pretty much been turning a blind eye to AMC and even GameStop, but the overall fraud, manipulation, and corruption that has been going on in the stock market that we have proven time and time and again with all of our due diligence. What has come out today really does help put this whole video together and solidify my theory a little bit more in my own head. So I do want to share my findings with you guys. I think a lot of you guys will be compelled with what is in this video. So let's not waste any time getting into it. Drop that like on the video if you want to help spread this video out to as many people as possible. I think they will get some valuable information out of it, as well as consider subscribing to the channel. And with that, let's get straight into it. I do want to start off this video by saying that everything that does happen in the world, love it or hate it, is revolved around money. I shouldn't say everything, but a majority of everything is revolved around money. Specifically on Wall Street, everything is revolved around money. And the SEC, they throw around fines here and there, take some money from Citadel's pockets, put it into the SEC, but we are only talking about hundreds of thousands of dollars. One fine in 2017 was for $22 million, but that is a drop in the bucket for Citadel. So they're obviously not going after Citadel as a company, and to be quite honest here, Citadel is a monopoly in the financial industry, specifically with retail stocks. Citadel has focused on retail stocks. They have put all of their energy essentially into these retail stocks because they make the most off of our retail orders. And we're going to talk about everything that I am discussing, but why I say everything is revolved around money and why they are really not cracking down on Citadel, at least not in a timely fashion. Only time will tell if they ever do. If AMC just were to crash and die, I don't think anything would ever happen. But the SEC is paid by the broker dealers. Now, guess who is the largest broker dealer that controls 47% of the retail trading volume, much higher than the average broker does control over the overall markets? Citadel Securities LLC. Right here is a broker-dealer regulated by the U.S. Securities and Exchange Commission and incorporated in the state of Delaware. But how the SEC is actually paid by these broker-dealers, this says the SEC fee is a small fee that exchanges and broker-dealers must pay to the U.S. Treasury to help offset the governmental costs associated with regulating the equities market. Most of the SEC fees are shouldered by broker-dealers, who in turn may pass the cost along to investors. So, very clear here. There is a lot of financial incentive to be doing this, and when they are caught doing this, they are only slapped on the wrist, because I would imagine that obviously they are sending more to the SEC through all of these small fees on a daily basis than what they actually want to do to hurt Citadel as a business. So I do think the SEC is at some degree covering up for Citadel, and they are really the reason why we have not seen the mother of all short squeeze, in my personal opinion, and they have not cracked down on Citadel thus far. And what the SEC did come out and say today about that they are essentially paying whistleblowers, people that expose fraud, corruption, or manipulation that leads to some level of prosecution, are paid out a percentage of the profits essentially the SEC is getting from the perpetrators. And this did start this whole whistleblower program in 2012, but in just this last year, in 2020, the payouts have been $500 million. So 50% of the total payouts have happened in 2020, but you haven't heard about anybody that has been going down for anything. The last payment that just went out in October was for $110 million. They simply put, they want to keep their hands in the hedge funds' pockets, but they also don't want to shine as much light as what should be shed to the financial markets. It's really pushed under the rug. I think it would really make the SEC look uncredible. So there's two fronts here. There's the financial incentive, whereas obviously we have already went over, but there's also really, they don't want to make the U.S. markets look to be as fraudulent and corrupt as they truly are, as we have provided in our due diligence diligence pieces here on YouTube, on Twitter, everywhere. You guys already know the deal with that one. But now let's turn our attention to Citadel and what they have been doing that directly has some conflict of interest with the SEC. And let's first and foremost go over the two small fines that they got in 2020. This says Citadel Securities fined $275,000 for reporting violations after a $700,000 fine in 2020. This says, however, from September 2012 through mid-September 2014, 2 whole years, Citadel Securities employed pre-trade protocols, settings, and processes that removed hundreds of thousands of OTC customers' orders from that logic. While those control settings and processes had multiple purposes, they shared a principal purpose of directing mostly larger OTC customers' orders for manual review and or handling. Impacted orders were rendered inactive until the completion of a manual trader review. While OTC customers' orders were inactive, Citadel Securities, in many instances, as part of its market-making activities, traded for its own account on the same side of the market at prices that would have satisfied the orders without immediately, therefore, executing them up to the size and at the same or better price as it traded for its own account. This is what they've been doing this whole time with AMC, and it's a long-running theory of mine, but also many apes, that they are potentially, since they do have such a pull in the retail markets, that they are essentially holding on to our buy orders when the stock is going up. They are letting out our sell orders when the stock is going up, and then basically doing vice versa, doing the opposites. So really creating a lot of negative downside pressure for AMC. When they are shorting the stock into the ground, that's when they set out some of these buy alerts or buy orders. And you know, that is just how the whole system is set up, but it's not supposed to be manipulated in that fashion. It is said in the SEC codes, right? I'm not sure exactly which one it is. We have a lot of information to go over in this video, but it is said that basically the broker dealers, it's up to their own judgment when and how they process these orders up to a reasonable expectation. So don't hold on to them for weeks or even days or even hours. But if it takes an hour, 2 hours, 3 hours, then by all means, that is okay with the SEC, but that should not be okay with the SEC. That is right there a huge red flag. But let's talk about this specifically. What Gary Gensler did say, this actually did come out on August 9th. So let's zoom into this a little bit, not that close. It says, in quotes, "We are taking a real close look at market structure, and I recently stated, engaging on Twitter and to some of those Twitter followers that are writing about dark pools. We are looking very closely at this market structure that so many of our orders, retail public orders, are not going to the lit markets, but are going to internalizers, going to wholesalers, where we're taking the retail public trades rather than sending them to the stock exchanges." And they are letting this happen, guys. They are letting this happen. So right here, let me get this straight. The company shorting the stock also directs the order and fills it. That is exactly what is going on. Citadel LLC, that is the hedge fund. And obviously the market maker that takes the back end of some of these trades. And then the dark pools. So they could be shorting the stock, buying it back in the dark pools, or vice versa, really having a all-around monopoly with what is going on in the market. So definitely a huge conflict of interest. The SEC just turns a blind eye to what is going on, which is not surprising at this current moment. But let's just talk a little bit more about Citadel Securities and Citadel Connect. So if you haven't been following the Wall Street Bet saga across multiple Senate Banking Committee hearings, here is a brief recap. As the largest designated market maker, DMM, on the New York Stock Exchange and accounting for 47% of U.S.-based retail trading volume, Citadel Securities LLC also accounted for a significant portion of Robinhood's Q1 2021 revenue, thanks to Robinhood's payment for order flow business model. It says, it goes on to talk about payment for order flow. That's just a bunch of BS. In my opinion. It says, in the same statement, Gensler further noted that around 9% of January's trading volume was executed on alternative trading systems, ATSS, commonly referred to as dark pools. So let me get this straight. Citadel is the largest market maker for retail trades 47%, and the average in the markets for these orders going to dark pools is 9%. So why are we seeing AMC that is consistently over 60%, close to about 65%, even going close to 70% on some given days? Look at this right here, the 13th of September, the last day we did get this dark pool percentage, 64.3%. How are they letting this happen? It is a financial incentive, and that is obviously clear in this situation. It says right here, alternative trading systems, ATSS, or dark pools are private exchanges that have liquidity benefits but can also obscure trades. Together with internalizers, they account for over 40% of the global equity market. Dark pools gained traction after 2005 following the SEC's adoption of the regulation NMS, National Market System. NMS modernized the stock market to make it as we know it today. Therefore, dark pools are completely legal and regulated. Are they really regulated? As we do know, Citadel Connect is not regulated whatsoever. Right here, not registered. So they are not registered with the SEC, but they do facilitate a large portion of Citadel's trades. Also, you guys should be familiar with the $22 million fine that Citadel did get in 2017. Still a drop in the bucket. They really don't want to hurt Citadel as a business. Like I said, they just want to get a little bit out of them, come out with these public releases and make it look like they're actually doing something. But what they were actually doing is Citadel Securities made misleading statements suggesting that it would provide or try to get the best prices saw for retail orders routed by other broker dealers, said Stephanie Atkin, I can't even say that, acting director of the SEC Enforcement Division. Internalizers can't suggest they are doing one thing, yet do another when it comes down to pricing trades. And the two strategies that they did implement, or two algorithms, which are the highest secretive algorithms in the world, only 15 people even have access to these algorithms, is the first one is called fast fill. Immediately internalize an order at a price that was not the best price for the order that Citadel Securities observed. So literally taking the worst fill out of the best fill. So a lot of these times it's going to be pennies, but pennies are a lot when you're talking about millions and billions of orders potentially on any given day. Also, the other one is called Smart Provide, routed an order to the market that was not priced to attain immediately the best price that Citadel Securities observed. And this did happen for years. They made billions of dollars off of this. This is the reason why they are the behemoth. They are the monopoly and the giant that they are today and have so much pull in the overall market. So this really comes down to a financial incentive, because obviously the SEC as well as the Treasury are paid by these hedge funds and market makers. Specifically, Citadel is the largest one out of them all. So why crack down on your biggest customer? So drop that like on the video, as well as hit me down below in the comment section what you think about all of this information. I would love to hear from you guys and love to hear your opinions, as well as consider subscribing to the channel. Also, if you guys want to donate to the GoFundMe, that is still pinned in the top comment. And if you guys have not seen the post that I did make, or not see the pictures in the other videos already, here is your guys' proof. Some of you guys thought I was making this up or something. I could see why some, be skeptical about some of these things. But that is not what we're about on this channel here. The only real proof is the scar. Well, not scar, but tattoo, broken heart. And then that's where they actually had to do the surgery to release the pressure. And then here is the tattoo right here, obviously before the accident did happen. So there's that. That is that. If you guys do want to do that. If not, just say a prayer. That's probably even better than donating at this point. But that is going to be all for this video. Check out the links linked down below in the description. There is a link for the buy and sell alerts. We keep it very inexpensive, so anybody can be a part of that program and grow their knowledge with long-term investing with crypto, as well as all different kinds of trading. We trade shares for swing trades, day trades. We also do a lot of options trading for day trades, swing trades, and even longer term leap options. So if you guys want to be notified in real time every time a trade is bought or sold, check that out. Very inexpensive, like I said. Also, if you guys want to directly support the channel as well, there's a link for public. Obviously, no need to link a bank account or deposit a single dollar. You get up to $70 in your choice free stock. It only takes about 3 minutes time. So that is by definition free money. Also, the link for Webull. So that is all for this video. I hope you guys enjoy the rest of your night, and I will see you in the next one.